I think the biggest surprise during August was around expensive companies. They got more expensive. We thought the results wouldn't be catalyst for a re-rating, so we got this wrong. We thought the expensive companies, they were done, they wouldn't re-rate. But what we saw was earnings pretty well came in line with expectations, but there was a big PE re-rate. So the PEs of these companies in the top quartile went up about 4.5 PE points. So earnings didn't really change, but the market's willing to pay a lot more for these companies, even though the earnings weren't accelerating faster than the market thought. So you had a whole lot of money flow back into that high momentum, high PE stocks, and that surprised us. Also, some of the companies which were very much on the nose, like Boral, Brambles and QBE, all performed well. Low expectations, they were the exception where low expectations, the results were just in line, but they re-rated as well. So some of that deep value actually did perform okay too. We're looking at where we are in the cycle, and it feels like we're late cycle. So we're looking in the sectors that perform well, so healthcare. Healthcare is a really expensive sector, so we're debating whether there's an opportunity there or not. You could look down the bottom of the food chain, like primary health. They did a capital raising during August. Not a great company, they're in turnaround phase, but cheap. So you can look at those sort of things. We do have a holding in primary. Other areas, consumer staples appear to be a good sector to be in too. They've re-rated, but you've got a high degree of certainty around earnings. So you could look at Woolworths and Wesfarmers as companies where you're going to be pretty well right with earnings, and we think there's enough catalyst to keep these companies re-rating too.